down when China markets open. Julia, what did you make of the session?
Well, the whole world's watching what's happening in China at the moment. So fears that China slowdown is a lot deeper than what was initially priced into the market. And that leads to, of course, a slowdown in terms of global growth and fears around a deflation spiral where that lower growth situation leads to lower production, that lower production leads to less jobs, and then of course less jobs leads to less spending, leads to less production, and so on and so forth. Now the emerging markets have been grappling with this for some time. They've been grappling with the potential of both the US rates going up, so lending rates going up and growth becoming more expensive, and on the other hand China also devaluing its currency, so emerging market exports becoming less attractive on the international stage. So we have seen outflows out of emerging markets for 7 weeks. In fact, last week was the worst week that we have seen in 5 weeks, but I guess it's just spread from being around the fringes to now into developed economies and markets like the US. So what was just some rumblings around the edges has really spread into pretty much global asset markets, and we've seen a massive fall in terms of the US, but of course China today down by another 9%, the Australian market down by 4.1%. The month to date we've lost about 12%. That makes it the worst month that we've seen since October 2008. And that was in the middle of the global financial crisis. That was actually the worst monthly performance during the global financial crisis. And on a daily basis, one of the worst performances was negative 8.3%. One of the best days in October 2008 was positive 5.6%. So I think volatility has spiked. And the big question for investors now, is this a normal correction or is this something deeper? And I guess we can get a clue in terms of the technicals. It is very macro driven at the moment, but the size of what was traded on the market today, $9.3 billion worth of stock on a Monday for the Australian share market. That's about 3 times the normal value traded. We saw $8 billion traded on the ASX, and then we saw $1.3 billion traded on Chi-X. And
that's a real concern, right? Because there's a lot of conviction there with this sell-off.
Absolutely, and volume acts as an accelerator pedal, so the stronger the volume, the stronger the move. So that indicates that perhaps this rout is not over yet. So at the moment, the correction from the highs that we saw in March this year, which was just below that 6,000 point mark, is around about 13%. But the fact that volume still remains very strong, volatility has spiked, it suggests that the volatility still has a little bit more to go.
So BlueScope Steel did particularly well today, given the fact that for what the rest of the market did. It's up close to 9% at the close at $3.67, returning to profit. Is this good news? I mean, how much might we have seen it up on a good day?
I guess BlueScope Steel has had a very difficult few years from that very high Australian dollar, but things slowly have been moving in its favour. The Aussie dollar now definitely weaker, which is good news for BlueScope. The fact that they are back at profitability, and also predicting that in the first half it's going to be quite similar to what they saw in the second half. So it does look like BlueScope on the mend. Not only that there's a possibility of Port Kembla closing down, and that would mean BlueScope Steel focuses in on its value add products, and that's the paint coated steel as well as the coated steel, and that's really because still China imports really looking quite competitive, so it's still a quite difficult atmosphere for BlueScope Steel, so focusing in on those value add products, but we won't know the results of that strategic review till November. But that Aussie dollar I think is a big consideration, and is a big consideration for the Australian share market. About 50% of the volume going through the Australian share market is usually international investors. And international investors want to see the Aussie dollar rise while they're invested here, not fall. So if the outlook for the Aussie dollar is soft, then generally we see selling in those big liquid companies of ours there, the big 4 banks, Telstra, Wesfarmers, Woolworths, and we certainly saw that today. Commonwealth Bank down 4.1%. Westpac was down a massive 6.1% in one session. Wesfarmers probably the best out of that lot, losing less than 2%. But certainly the expectations around Aussie dollar is important for the Australian share market because it is seen as a proxy for China.
Well,